How can a dude sitting in his basement in Birmingham, Alabama, have a 6 month return on his portfolio of 94%, beating the S&P, the Dow, even beating the hedge funds? How can this dude achieve that? Or is it real? Well, you saw the chart from Morgan Stanley on my portfolio. You saw the numbers. But how is this possible? It's possible because of AI. I've mastered AI. I've mastered the prompt to give me an insight into the companies that are going to bring us the AI revolution. And then I'm able to determine those that are going to give me, I look for a 100% return over 3 years. I'm sorry, some of them are going to give me that in 8 months. Actually, some of them have five-folded that in the last 3 months. So how does this work? Well, the best way I can explain it to you is we have a Discord at Best of Us Investors. And BK sent me yesterday a message that said, Kerry, would you look into these following stocks for me? Or I should say, would you have Samantha look into them? Robinhood, ticker HOOD, New Gold, NGD, Viva Systems, VEEV, and Cameco, CAMRCO, ticker symbol CCJ. I looked at them and I said, well, the one I'm really interested in is this CCJ, and it's in the uranium business, and it's showing some growth, and there's some going to be a need for a lot of uranium as a means of, or as a result of the demand that AI and data centers are going to put on our energy system. So with that, I went ahead and asked Samantha to do an analysis, and she gave me a 24-page document to tell me what exactly to do with CCJ. Well, rather than me go through that, the next step I take is I turn it over to Samantha and Bard, and I ask them to do a podcast in which they explain to me exactly what's in that 24-page document and give me the projections of what the price of CCJ are going to be in January of 2026, 27, 28, and 29, and then give me are they going to achieve my 100% goal and a rating as to their strength. And I could go through all that with you, but instead what I'm going to do is say goodbye, and then I'm going to turn you over to Samantha and Bard. Now, they get their gender confused sometimes, so bear with them on that, but listen to this. And then I would ask you the question I asked you at the beginning. How can the bus portfolio be up 94% over the last 6 months? And then I would ask you to answer the question, are they going to do it again over the next 6 months? And then I want you to ask the question, can you not be on that bus? Is there any way in good sense that you don't put your ass on that bus so that you can change your financial life? I'm going to say goodbye now and turn you over to Samantha and Bard.
Welcome to the Deep Dive. I'm Samantha.
And I'm Bard. We are Kerry's AI research agents for Best of Us Investors.
And today, we're diving deep into an analysis of Cameco Corporation. That's ticker CCJ.
That's right. And our objective here is pretty specific and, frankly, quite demanding. Kerry needs our assessment on whether CCJ can realistically deliver that 100% plus return over the next 3 years.
Especially given where it's trading now, right? Around $83.86, which is near its all-time high.
Exactly. So that means we need to really dissect the numbers, the strategy, everything that might justify or not justify this current premium price.
Okay, so let's jump right into the quantitative stuff first, because
Sure.
Well, you can't ignore that price tag on CCJ. It's clearly a leader, the blue chip in uranium, benefiting from this whole nuclear energy comeback.
But that excitement, it's definitely pushed the valuation metrics into, let's say, eyebrow-raising territory.
Definitely. I mean, you look at the trailing 12-month PE ratio.
Yeah, the TTM-PE. It's sitting up around 94. Yeah. And just to be clear, that's not a valuation you typically see in the energy or mining sector. That feels much more like, a fast-growing tech stock.
But, okay, there's a reason the market seems willing to pay up. The actual performance, the profitability, it's been surging. They've got an improving B+ grade there.
That's true. The margins are looking pretty healthy. TTM gross profit margin is, about 35.6%?
Yeah, net profit margin around 15%. Pretty solid.
But the real story, the thing grabbing headlines and investor attention, is that earnings growth. The earnings per share, or EPS, surge.
Right. Q2 2025, the EPS came in at $0.71.
Which was way above the forecast, right? Forecast was about $0.35.
As bull, more than double.
Exactly. And that just blew past expectations. So now the projection for the full year 2025 EPS growth is something like 140% year over year. Massive.
And that rapid profit growth, that's really the main argument defending that sky-high PE ratio, isn't it?
It has to be. It shows they can convert that top-line revenue growth into actual bottom-line profit very effectively.
Okay, but high growth often comes with risk. So we need to look at the balance sheet. And this, I think, is where Cameco really earns that blue chip reputation.
Absolutely. Their financial foundation is exceptionally strong, much stronger than, say, the smaller junior miners in the space. They're getting A grades for both liquidity and solvency.
So talk about liquidity, the current ratio.
It's 2.96. So what does that mean for you, the listener? It means Cameco has almost $3 in easily accessible assets for every single dollar of its short-term debts.
That's a huge safety cushion, especially in a cyclical industry like mining.
Huge. And then there's the leverage, or lack thereof. Their debt-to-equity ratio is tiny, just about 0.15.
Very low.
They're holding $525 million in cash. Total debt is around $739 million. And on top of that, they have a $1 billion credit line they haven't even touched.
So financially, they seem almost bulletproof in the near to medium term. No solvency issues on the horizon.
None that we can see. Okay, so now let's apply Kerry's key growth test, the Rule of 40.
Right. Quick refresher for everyone. This rule is a benchmark, basically checking if a company's growth justifies a high valuation.
Yeah.
You add the revenue KGR percentage and the EPS KGR percentage.
And if the total is above 40%, it suggests the growth profile is strong enough to potentially support that premium price.
And CNAGRs.
Oh, they pass this easily. With flying colors, really. Even being conservative, you project revenue to AGR maybe 10 to 15% over the next few years.
Okay.
But the EPS CGR, based on current trends and forecasts, that's projected much, much higher. Somewhere between 30% and maybe even 50% annually.
So add those together.
And you're getting a Rule of 40 score that could easily be 50, 55, maybe even higher.
Wow.
And that projected growth engine is why the market is treating them so differently from their peers.
Which brings us right back to that elephant in the room.
Yeah.
The valuation. We said TTM-PE is 94. Even looking forward, the forward PE is still way up there, around 76.
It is. And you compare that to their closest big competitor, Kazatomprom. They trade at roughly 13 times earnings.
13 versus 76 or 94. That's a massive gap. So the question is buying CCJ now just buying the peak? Is that PE sustainable?
That is the critical question. And the answer, if there is one, has to lie in their strategy and market position. The market seems to believe Cameco isn't just a uranium miner anymore.
You see that in the price-to-book ratio too, right? It's about 7.4 now, compared to its own average over the last 3 years of about 4.1.
Exactly. Investors are clearly paying for something more than just the current assets on the books. They're paying for future potential, for strategic shifts.
Okay, so let's pivot to that strategy then, because that's what needs to defend this valuation. They're seen as best of breed. Why?
Well, partly it's their assets. High-quality Tier 1 mines located in stable places like Canada. That's a big deal in the mining world. Plus, they actually make money, $2.6 billion in TTM revenue, $391 million in profit. Many smaller uranium companies are still, trying to get profitable.
And the overall market, the total addressable market, or TAM, is looking favorable.
Very favorable. This nuclear revival seems real.
Wow.
You've got over 60 reactors being built around the world right now, adding to the 440 already operating. Global nuclear power generation is actually set to hit an all-time high in 2025.
That provides a strong tailwind, definitely. But the key strategic shift, the big one, is that Westinghouse deal, isn't it? Where Cameco took a 49% stake.
Yes. This is, I think, the absolute game changer for how you value Cameco. It moves them way beyond just digging uranium ore or yellow cake out of the ground.
How so? What does Westinghouse actually do?
They're a major player in the nuclear fuel services market. Think fuel fabrication, reactor maintenance, engineering, a multi-billion-dollar business. They service something like half of the world's entire reactor fleet.
Okay, so it adds a much more stable, industrial-like revenue stream compared to the volatility of just mining.
Precisely. And Westinghouse is also an innovator. They have the established AP1000 reactor design, and they're pushing forward with the new AP300 small modular reactor, or SMR. That's potentially a huge future market.
So buying into Westinghouse transforms Cameco into this integrated, reliable Western nuclear fuel supplier. Less risky than just being a miner.
That's the core argument justifying the higher multiple, yes. It fundamentally de-risks the business model. And then there's another layer, that longer-term bet, global laser enrichment, GLE.
Right, they own 49% of that too. What's the potential there?
GLE is working on a potentially revolutionary laser-based technology for enriching uranium. Enrichment is a crucial step between mining and fabricating fuel rods.
So if GLE's tech works out and scales up,
Then Cameco could become fully vertically integrated, from mining the raw uranium all the way to delivering the finished enriched fuel ready for fabrication.
that would be a massive competitive advantage.
Huge. It would open up a whole new segment of the nuclear market for them, giving them an edge that, say, Kazatomprom couldn't easily match. Kazatomprom focuses on low-cost volume, but they carry that higher geopolitical risk being based in Kazakhstan.
So that PE of 94, you're saying the market is basically pricing in the successful execution of this entire vertical integration strategy, including Westinghouse and potentially GLE down the road.
That seems to be the most logical explanation for it, yes. It's a bet on strategic execution and future market capture.
Okay, let's shift gears then to the tactical side. Given this high price, if someone wants to invest or add to a position, where's a responsible entry point? The risk-reward picture looks a bit less attractive up here at $84.
You absolutely have to acknowledge the downside risk at these levels. I mean, in a really bad scenario, maybe uranium prices fall hard, reactor builds stall. Could the stock pull back significantly? Yes.
Yeah.
Maybe down to the $40, $50 range in a severe correction.
But technically speaking, where's the more immediate major support?
Looking at the charts, the big floor seems to be around the $60 level. So from $84 down to $60, that's still roughly a potential 40% downside risk. Not insignificant.
Okay, but the trend is still technically bullish, right? The moving averages were pointing up.
Yes, the trend is up. The 50-day moving average is currently around $78.45. The longer-term 200-day moving average is down near $59.21, which lines up pretty well with that $60 support level we just mentioned.
So the analysis suggests maybe waiting for a pullback.
Our thinking is, yes, accumulate on weakness. An ideal entry zone might be closer to that 50-day moving average, say in the $78 to $80 range.
And for managing risk, a stop loss.
Given that $60 level is key support and near the 200-day MA, setting a stop loss just below $60 seems prudent. Maybe around $58 or $59 to give it a little room.
What about the upside? Where's the resistance?
Well, the immediate hurdle is simply the recent all-time high area, roughly $89 and $90. If it can break convincingly above that,
The $100 becomes the next target.
that's the big psychological number, yes. A sustained break above $90 would likely target $100 next.
All right, now for the moment of truth. Let's bring it all together and address Kerry's core question. Does Cameco stock have what it takes to deliver over 100% return in the next 3 years? So by January 2028.
We've run the numbers through our scenario modeling, and the conclusion is, well, achieving that double depends very heavily on which future unfolds.
Let's break down those scenarios. We looked out to January 2028. What's the conservative case?
In the conservative case, we assume uranium prices kind of languish, maybe below $60 a pound, and perhaps Cameco hits some snags restarting their mines. Under those conditions, our price target for January 2028 is only about $90.
Okay, so $90 from the current $84.
Yeah.
That's barely any gain. Fails the objective completely.
Completely fails. Now, the moderate case. This assumes things go pretty well. Cameco executes on its plans, uranium prices stabilize in a healthier range, say $70 to $80 per pound.
And the price target then?
Our moderate case target for January 2028 comes out to $130.
$130. That's a good return, but
But it's still only about a 60% to 70% gain from today's price. Solid, but it falls short of that 100% goal.
okay, so that leaves the aggressive case.
Mhm.
What needs to happen for the stock to double?
The aggressive case is where we hit that 100% ROI target. This scenario requires a genuine uranium bull market, maybe even a supercycle, with prices pushing well past $100 a pound.
And crucially,
This scenario almost certainly requires a major geopolitical event that tightens the uranium supply significantly for Western utilities. The most obvious catalyst there would be a formal ban or severe restriction on Russian uranium exports.
so the double depends on that external shock.
Largely, yes. Under that aggressive case, our model projects a January 2028 price target of $170.
$170. Okay, that finally gets you over the 100% return mark from the current $84 price.
Exactly, but only in that quite optimistic geopolitically influenced scenario.
So wrapping it all up, based on this analysis, what's the investment score we assign Cameco relative to that specific 3-year 100% ROI goal?
Given that the goal is only met in the aggressive scenario and the valuation is already high, we have to score it accordingly. We're assigning Cameco an investment score of 65 out of 100 for this particular objective.
So 6,100. It reflects that it's a high-quality company, great assets, strong growth prospects.
But the current price already reflects a lot of that good news, making the path to a further 100% gain in just 3 years quite challenging without those aggressive assumptions playing out.
So the final recommendation.
Our overall recommendation is hold existing positions if you have them, but for new money or adding, the advice is to accumulate on dips. Be patient. This is likely a solid core holding for the nuclear theme long term, but your entry price discipline is going to be really key to maximizing your potential return.
Okay. And maybe a final thought for you, our listener, to consider. Since our analysis shows that reaching that 100% target hinges so much on the aggressive case playing out.
Which, as we said, is tied pretty closely to geopolitical events like a potential ban on Russian uranium.
You might ask yourself, does the current global political climate actually make that aggressive scenario seem more likely than, say, the moderate one? And if you believe it does that perceived probability shift justify paying the current premium price for CCJ right now?
Something to mull over.
Definitely something to think about. And please remember, this detailed analysis is proprietary research. It's part of the Best of Us Investors Platinum program.
That's right. It's created exclusively for our private membership community. So please do not share this deep dive or its findings with anyone outside the Best of Us Investors community.